Good morning, traders. It is 8:03 a.m. Chicago time on Tuesday, the 19th of December, 2017. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market currently is mixed, really. The equity indices are on the upper side, higher side. The energies are leading. Crude oil's up 0.82%, up 46 cents, trading at 57.69 on the February contract. The euro's up today, up 38 pips, 0.32%. The laggards today are Bitcoin, down 3.44% on the SIBO contract, and down 3.01% on the CME contract, followed by the Treasuries, Eurobond, and the European indices. Overall, a mixed bag. The S&P is slightly higher, trading inside of what was a very, very tight, compressed day yesterday. The overnight session hasn't done anything at all. And so here we sit near all-time highs, below the 2,700. We couldn't even test that yesterday. And there's several features from yesterday that we should look at, that we will look at here on when we look at the screen. As far as, I'm not going to go over news. You can look that up yourself. As far as what could affect our trade today, the numbers that were important have already come out at 7:30 in the U.S. and at 5 Eastern in Europe. We got the German IFO and German IFO and Eurozone construction output earlier this morning, and then we just got, about a half hour ago, we just got the current account housing starts and building permits. I don't see speakers on deck. Just remember that today at 2:30 Eastern, the January 2018 WTI futures expire. You should be trading February. That's about it. There's nothing on deck is the bottom line there. Here's what we saw, what we expected yesterday. Yesterday, the expectation was for a gap up. We saw that the market was gapping about 10 points or so, and the expectation is for it to go sideways and retrace a little bit, get responsive. The overnight inventory was all on the buy side, long side, so looking for a minor rebalance there. And then I was looking for a push to 2,700, an impulse up to 2,700, and then hold steady in that area, looking for a close between 95 and 700. So that was, not too much range. Did not expect much range yesterday. Did not expect a lot of fervor, so to speak, in the trade. It was Monday after expiration, after all, and we are at new all-time highs. We just can't, we generally cannot keep pushing it under those circumstances, at least historically. The secondary hypothesis was, fingers crossed, did not happen. Was hoping for it. The market pushes up towards 2,700, fails, rotates down to mid, and then pulls back to the open at about 92, and then it continues down into the range to test the range from the prior day. The probability of closing the range was pretty low, and of course it didn't work out. Here's what actually happened. Very minor pullback, just very, very, very poor responsive action there before we started to push higher, and we put in the high quite early in the session. Not even in the first 20 minutes or so. I think it was in the first 15 minutes. And the low was put in the first couple minutes, and that was it. That's all she wrote. There was nothing to see here. Nothing to do here. There's very little range yesterday, looking at about 7.5 or 6.5 points. 6.5 points for the entire day. The value area is very tight. the trade was very, very tight. There was just nothing to do yesterday. Nothing. I anticipated an opportunity right here for a push, pull, push into the IB high on the break, looking for 97% or so break of the IB high or low. That's the IB stat. Just did not work before it started to roll over, and there was nothing from there on out. I didn't see any real setups except for maybe scalp setups, but even then the range was just too poor to do anything with. So that's what we had yesterday. Now we know we're consolidating. We know that that could lead to something big. The volume was relatively low, 839,000 versus 1.1 million is the expected or standard. And so very little volume, relatively lower volume on very little range. So we're looking for something to break here, right? So we look at the overnight session. Where's my overnight session? Here we go. We look at the overnight session, and man, that's just horrible. Same thing, basically. Inventory's all positive, not by much. You can see the delta here is pretty much against zero. There is a difference in price to the long side. Difference in price to the long side for inventories. But overall, the overnight session has now put in a double top. There's one, there are two, and combined with yesterday, we have a triple top at the high. Relatively weak high, very poor high, very poor trade, very, very tight overnight session. There's nothing we can gather from this except that we're consolidating, and the volume again was pretty much the same. I mean, the overnight session volume's around 110,000, 120,000. That's what we expect. Just like for the day session, multiplied by 10. That's just a coincidence. Multiplied by 10, the standard volume for the day session or the pit session is 1.1 million. And then during the day yesterday, we got 839,000. And during the night session, we got 88,000. So that's a factor of 10 as well when you relate them to each other. So essentially the same participation overnight or lack thereof continued on into the overnight session. So there's nothing here to do. It's consolidating. It is Tuesday with little in front of us except for news on this tax bill. This gap was caused by a couple of holdout senators bowing in and agreeing to vote for the tax bill as is. So there's a high probability that this new tax bill will pass, and the expectation is that the market will take a little pop and then sell off a little bit to having priced in that news. Profit taking is expected to take place, which was basically the basis for this entire rally since the election last year, is this tax bill and deregulation. And so we're looking for that to cause the market to start to re-auction what we've left behind, at least some of it. So those people who have been betting on the tax bill passing are likely to take some profits off the table. Not everything probably, but some. So that's where we are. There's just not much I can say about it, about the trade currently, other than I'm not seeing a lot of opportunity or a lot of favorable opportunity on the ES. Real quick, because so many have written in to ask, I posted this, I believe, on Sunday night. This is, again, I'm not advocating or pushing for Bitcoin here, but it is a market that I'm extremely interested in. It seems like that's where the volatility is, and volatility is opportunity, but also is risk. And so what I did is I plotted the SIBO contract, the XBT Bitcoin contract, against the CME contract, which started on Sunday. You know, the SIBO is a week old, and the CME just started out, but they're trading, the underlying is the same product, so there's a correlation there. And what I'm plotting here is the difference between the contracts and seeing how they converge on zero. There's zero. In a perfect world, these two contracts would tick for tick have the same price. But they don't. There's a tendency for the CME contract to be more expensive than the XBT contract. However, if you look at the CME contract, I'll show you what the depth looks like. That's what the depth looks like. It is horrendous. Look at that. The bid ask is very wide. There are two lots and one lots. This is the order book depth here. You can see there's just no flow in here at all. Hard to read. See, this is from yesterday. Look at that. This is a terrible heat map here. Just awful. So there's not much there to build an edge on just yet. The XBT contract, which is coming right off of my S5 trader feed here, is much more legible in the heat map. You can see the depth is pretty good. The profile looks pretty good. There isn't that much trading, so you see these dots. These are trades. They're generally one lots. There's not much trading going on still, but overall the depth is pretty decent. You could see areas where the market comes in, where the offer comes in and holds the trade, and then it gets a retest before it falls. So I'm seeing the same principles I talked about in my webinar 5 and the webinar series on my website. I'm still hunting for an edge here, but there's not enough participation here, I think, for me to do anything with this market just yet. Okay, so if we go back and look at how the spread looks, so this is an important chart to me. This tells me the relationship between the two products. So right here, all I'm plotting is the price of XBT minus the price of the BTC contract on the CME. Here's the XBT contract plotted on a 15-minute bar chart, and then the volume on the spread. So it's combining the volume here, and we could see that the participation, so we only have a day or so, but the participation is very interesting. It kicks in with the Asian markets. It dies down, opens up again with the European markets, and then, as we saw yesterday, high volume with the U.S. Open. So what it's doing is it's trading just like a currency with the trade book moving around the planet. It is picking up and dropping off with the major markets, and so you can pick your, once this thing becomes tradable, you can pick your the period. The trading period that suits your schedule, your job, whatever, and it's likely to give us some opportunities once it stabilizes. Okay, so as far as what we're expecting here, let's go to the 15-minute on the ES. Still have a big gap zone underneath us this morning. Not expecting too much, however. We did consolidate a fair amount yesterday, so caution. Cautions is advised here because we are likely to make a move out of here. The expectation this morning is an open auction that dips into yesterday's balance, recheck yesterday's auction, consolidate, and then I'm looking for a break higher. I'm looking for this to break higher. I'm looking for 2,700 to be tested, capped right here, 2,700, and then I'm looking for it to consolidate at 2,700, push through, and then fall off on the close. This is the primary trade scenario that I have for today. I'm looking for opportunities. Again, when I'm looking at the order book, I'm looking for opportunities for when the market starts drifting down, I'm looking for areas that the market could, oh, oops, hang on. I don't have a whiteboard attached here. Let's put a whiteboard on here. Whiteboard, where are you? There we go. Okay, so I'm looking for areas to lean against depending on what I have in those areas. And then that way I can take that long with a little bit more confidence and backup. So that's really how I'm looking to trade it. So look for it to pull back to an area that has some pretty good depth against something substantial, mainly the point of control from yesterday, and then look for the long and then manage the trade from there. That's what I'm shooting for this morning. So that's the plan for the primary hypothesis, okay? The secondary is, again, the market gets overzealous, pushes 2,700, pulls back, makes a lower high. Notice the secondary plan is generally opposite of the first plan, and that's because I'm leaning towards the trend as my primary trade. I'm leaning to the long side always. If the long side doesn't work, then, door number 3 type of thing. And I'm looking for it to fail and then start to move towards the point of control and then to start dipping into the gap zone. This is a better trade for us today. We would get range expansion and some volatility if that happens, but it's a less likely play in my opinion. Okay? Again, make your own plans and then just lean against what you see in the order book as far as levels and so on, whatever your method is, and then manage the trade from there. I want to remind you again to take a moment today to make sure that you're doing something to win the day. This is all you've got right now. If the market doesn't give opportunities to us, it is a time to hone our skills and to work out those things that we need to work on to make sure that we're better traders. So that's that. Good luck today, and I'll catch you tomorrow morning. Take care.